All righty. And this is Get Soft in the Morning at 7:22 a.m. Eastern Time. And as always, the story of the morning probably is more than likely is crude oil. We did actually touch below under 100 overnight. Did get down as low as 99.29. Currently trading 105.36. Pretty decent pump back up to the upside. There were some rumblings of some activity going on over in the Strait of Hormuz, which I mean, majority of the idiots in this country probably didn't even know where the fuck that was even before this. They probably don't even know where it is now. But lo and behold, that is kind of the story of the morning. And, you know, crude getting a bit of a pump this morning. Does have gold kind of on its ass pretty hard. And as I've been saying, gold is at a very interesting, and I'm going to pivot off to gold because, you know, again, I'm not really trading crude oil. And the thing about gold is that, you know, it has been making a bit of a rounded top, call it what you will, but the price action, you know, if you were, you know, to look at just price action, regardless of what's going on with headlines, you have to take a bit of a, you know, I'm going to say, again, I'm saying bearish stance because I'm not overall like bearish on gold, like, oh, it's going back to 4K. But I am at a stance where I think, again, the long trades are going to be harder for sure right now than short trades. Short trades seem to be working a little better. There's a little better momentum to the downside. And that still remains to be the case. And unless crude oil, you know, drops down below $100, even back in the 90s, high 80s, I think you're going to continue to see the pressure on gold. And, you know, there's some, you know, and this isn't just trading and because of the war. It's actually an effect of the war. And I think what's really going on, again, this is just a theory of mine. I think countries are being forced to sell their gold to buy crude. So they're like, you know, where they were accumulating gold and selling gold, I don't think they're doing that as much. You know, they've kind of cut back their purchases because obviously it costs more money to buy crude now. So they actually need that money that would have probably went to buying gold. And if not having the money, they're selling gold outright and moving it, and it's going into, you know, I shouldn't say it's going into crude oil, but it's going to purchase crude oil. It's not going into buy crude oil futures, but it's going into buy crude oil. And that seems to be a blatant pattern here. And there definitely is a pretty clear inverse correlation between gold and crude oil right now. You know, and then also, you know, and another thing I don't think anyone is paying attention to is the dollar has remained, and I'm not going to say it's been strong, but it's remained remarkably stable and more so than, you know, I would have expected. And so there is a little bit of that going on. And so with the dollar kind of holding its own as well, that is putting pressure on gold. And so I continue to believe that this gold trade is going to be much easier to the downside than it is to the upside. And look, there's no easy. I don't want to hear from anybody, outside of maybe the first 2 months, or maybe from back in November, December time when we had this big run up in gold. It's really been it was basically all of 2025. I mean, you could just go long gold and just go home for the most part. But until that kind of fell off the cliff here back in 26, everything's changed. And, and I find it amazing that you have all these people, again, it's all these people that were able to just kind of set it and forget it, and I don't know how they did it. I don't know if they were just doing futures or they're buying call options on GLD or buying call options on gold. But however you did it, whether it was that or it was the AU or whatever ETF, and you were basically just buying out of the money options. And, it was kind of like 2000 COVID again with a lot of the tech stocks, and where you were just kind of closing your eyes, and then every jackass on the planet was like, yeah, it was. And it wasn't just gold. It was gold, silver. And then once it's kind of fell off here and now is becoming a more normalized market, even though I'm not going to call it normalized, but it's more trading a little more, I would say, like a real market should, where there's downside as much as upside. And now you're just finding that all the people that were one-way traders just don't know what the fuck to do. And, they're the ones out saying, price action sucks in gold. Yeah, does it suck in gold? I guess it does. I mean, I don't know. To me, the price action in gold right now, it just seems very normal. Like, I remember price action in gold being like this back when I traded gold, even a few years ago, even 10 years ago. And it was why I didn't trade gold all the time, because it was so fucking sporadic and it was so thin and it traded so thin. And that's kind of where we're at right now with gold. It's trading very thin. That's why you're getting these long wicks. That's why you're getting these like really crazy, like you get these run ups and then it literally just tanks in just like an hour or two, and it'll run up for a couple hours and then it'll tank. I mean, and this is what I remember in gold, whether it was going up or down. I always remember this is the way gold traded and why I never traded it. And so I think that's kind of what's going on too. And so don't be disillusioned that gold, I don't think the trades are over, but you just need to be really selective on what it is that you do. And as I said, I'm going to lean a little bit more bearish in gold. And I've been finding gold a lot better to trade in the nighttime after hours, after 6 o'clock, from like 6 to 10 when I trade at night. I believe it's much easier to trade it then than it is during the day. Because I think during the day it has too much competition and it's extremely thin during the day because it's competing with equities and crude oil and the other commodities as well. Where at night, it's really kind of the only thing that has any real price action. And again, that's just my opinion. So I've been kind of sticking to trading gold at night. And that's really all I have to say about it. There's no real levels in here that look remotely interesting to me other than this area here up at R1 is 46.68. I don't know if we get back there, as well as I also like this 46.58. I don't think I would really step in on a long down here anywhere. Not here and now. It looks too heavy, in my opinion, and that's pretty much it. Some of these levels up here are, I think, from today, and for today's news cycle and everything else, I think a lot of these levels are kind of a little far away. We would need a massive turnaround here and, another 100 points up to even get back up in these levels, and I just don't see that happening. Again, all things remaining the same, headline-wise. Now, stepping over into the equities, I do think the NASDAQ did touch another all-time high overnight. I believe, did it? Yes, it certainly did. It did touch another all-time high last night. It continues to just truck higher. I mean, there is the chart, and the Nasdaq continuing to be just the market that will not quit. That being the case has me a little cautious on trading it. Not to say that I've taken my stabs up here at the highs at times, but I've done it very minimally and done it very small. Usually just taking like one contract, not risking much, one micro, trying to risk maybe $50 tops, and then just looking for, one of these pullbacks, and then just look to book some quick profit and not look for a complete huge retrace all the way back down to some ridiculous level, because it just doesn't seem to be happening. They are buying the dips pretty hard in the Nasdaq, and as long as the case, I'm not going to fight that. And so if I were going to be looking for a trade today, it's going to have to be down here where we wicked down. It's going to have to be down here in this area. So you're talking the 27,616s. 27,617s. Right at the top of this range down here, 27,576. And then the reason that one's actually pretty important is because that is Friday's lows. And then there's also an S2 down there at 27,527. Again, 100 points away, but, given that this thing has moved the way it has, coming down and taking out another 100 points here and touching these levels really ain't no thing right now, the way this is moving. I mean, because this thing could easily retrace this entire move, come here, down here and touch. Plus, we got a low volume node down here. Come down here and touch and then rip back up all in the same session and then make new highs again. It's been doing that kind of trade. It's been kind of nuts. And that's really all I have to say about the NASDAQ. And then as far as the Russell is concerned, kind of similar price action. But I do like this one a little better up here at the highs than I do the NASDAQ. And at 28.32, I'm actually going to put a marker here at 28.24. 28.24, which is Friday's highs. It's also an R1. It's also at the bottom of this swing low from back on the 22nd. And this is an hourly. And so to me, this is a very strong area and for a possible short. Now, again, it's going to have to be a lot of things. I'm not going to go and short up there if I don't see anything, if I don't see any reversal kind of happening. And, it could very easily go up here and just plow through this like it doesn't even exist, like it did the last time. But anyway, so as far as like an interesting spot, that's an interesting spot to me today. And that's kind of a ways up there, too. That's about another 20, 25 points away from where we're at now. So you're going to have to sit tight on that one. And so that's kind of where I'm at on the Russell. Now, as far as the downside, I don't know. I haven't really seen anything that looks promising. This on the 30-minute here, it does look like there's a level here at S2, 27.92. I don't know if I particularly like that, kind of wicked up, right? Big wick, and I don't really like that usually. Going to the 15-minute, it doesn't look any better, a couple wicks, and then looking at the 5-minute, it doesn't look a hell of a lot any better, other than that maybe there's, you got the lows here from Friday at 27.92, and then quite possibly I'd probably be more apt to get long in this area below 2800 than I would anywhere. So that's kind of my thing on the Russell. Go back to the hourly. But if I were really looking for a right spot, it's going to be all the way down here at 27.26, and I don't know. Things would really have to go south for us to get back down there. And then the problem is, and why there's no real spots in here, is because this run that we had was pretty incredible and pretty strong. You did not have a red candle in this entire fleet of candles here. 1 hour candles. I mean, that's damn near that's freaking impressive. And there were no signs of any spots here that would trigger like, hey, look, this is possibly a level that we could find support on. I mean, as fast as it came up, it could go down through there just as fast. So, it is a double-edged sword there. So anyway, that's kind of what's going on in the Russell. We talked about gold, and then, another market I'm still kind of looking at. Haven't done many. I've tried a couple of trades, but it never got filled. And that's kind of the other problem with soybeans is that, if you are picking your spots, it doesn't always fill your trades. That's just the nature of this beast because it's not, I'm not going to say it's illiquid, but it's not as liquid as the equities. But you do kind of have to stand your ground on your levels. But I'm going to continue that. I think soybeans will continue to be positive here going into May, up into the WASDE report, which I believe is May. I don't even know. I have to look it up. But it is going to be, I don't know if it's this week. It might be this week. I'll have to look. It might be late. This might be Thursday or Friday or even next Monday or Tuesday. So I have to look. But there's that WASDE report that's going to come out. And a lot of what will happen in these markets, these grains markets, going to be reflective of what happens with that report. All right, and that's kind of it. There's not a hell of a lot. Now, as far as trades go, I was looking, and I'm trying to find stocks to do stuff with, and it's tough, man, because when I see this and I see nothing but a sea of green, I ain't buying none of this shit at the highs. I don't care. I don't care that, some jackass came out and said, the upside on NVIDIA is bad. I'm not buying anything at the fucking, I'm not buying fucking these stocks at the highs. I'm not doing it. I've never done it. I shouldn't say I never did it. I used to do it when I was a fucking young retard when I did this. Can I say that anymore? I don't think I can say that. But anyway, I was dumb and stupid, and I used to do that, and I got wrecked all the time. Because I let the FOMO kind of, and you keep seeing these stocks go up and up, and then what eventually happens. And I'm not saying short them, but sit on your fucking hands and wait. And I just can't touch any of these stocks. I can't. And so I brought me to looking at, I started looking at Palo Alto last night. And not only was I looking at the stock, I was also looking at the financials, and then going back on here, you can see, and I'm a little surprised that I didn't really catch on to this, but again, there's so many stocks out there to watch that. But you look at this one going back, and these are all the earnings that this has had for the last couple of years. This thing's a fucking earnings machine. This thing is an earnings machine, and now it hasn't been just a crazy run all the way up. It's had its ups and downs, and it's had its downs, like where it's actually rallied and it's got slammed. But, it got me looking at Palo Alto because they do have earnings coming up in May here in a couple of weeks. May 26th. I was kind of looking for stocks that were not at their highs, that kind of had a good revenue stream business. Staying away from retail, because I don't like anything retail right now, folks. Nothing. I do not like anything retail. And what I mean by retail, it's like anything to do with a direct consumer, I am staying away. I think those businesses are all going to be in trouble at some point or another, although they may have their little signs of like resilience, but I think overall they're all going to have problems going forward. And I'm staying away from like the DraftKings, and because when I start looking in here and then I go in and I look at watch lists, right? And then I go in here and the watch list I always like is this liquidity high volume. And then I always rank by IVR. And a lot of the companies that are actually I'm seeing on here are, they're either companies that have already run and at all-time highs, like AMD, like I can't get Intel, I can't do anything there, or stuff that's a little more consumer-based, like a Disney. Like, I don't care. They're still a consumer-based business, and that company hasn't really done it. Shopify, another consumer-based business, not interested at all. Snapchat, another consumer-based, not interested. PayPal, consumer-based, not interested. Affirm, another one, consumer-based, not interested. Costco, although Costco has done really well, the other side of that is like I'm not buying these things. I'm not buying a consumer-based business on the highs either. I'm just not going to do it. Uber, again, consumer-based. I'm staying away. Kraft Heinz, that thing's been a total piece of shit. X, or whatever they call themselves now, Block. It'll always be Square to me. And then, there are these software companies that I just do not have any faith in of them being, able to generate sustained. Like, they may have their quarters where they have revenue growth, but the revenue growth is going to come from them doing all kinds of fucking wacky accounting or taking charges or, some incentive they did. And so again, I'm looking for specific types of businesses with distinct revenue streams over the long haul and that are in a business where there is, growth. And, again, it just brought me to Palo Alto. I looked at it, and I'm going to hopefully find more. But all these stocks that are coming up on here, all to me are just like, as they say, an old school term, like a dog with fleas. That, again, I don't think the companies I don't think they're going out of business. I just don't think they're in a business where they're going to be able to really like pump out that revenue growth going forward. And then, and many of them, like you got a Datadog, for example. This company's been under pressure for quite some time. And just recently, they were able to turn it around where they've rallied back. And you can see, again, this one is kind of a revenue, kind of whatever you want to call it. But this last quarter was not good. Was it? No, I'm wrong. Scratch that. They have earnings coming up. I just don't think that the growth is there, because when I went back and looked at the earnings growth here on Datadog, it wasn't what I would have expected from a company this kind of small, and that they would actually, and the amount of CapEx that they had as well is what hurt it the last go around. Even though the earnings were good, the CapEx, and I think that's what's going to destroy these software companies, because I don't think this is, I don't think this is sustainable, not just for them, for all of them. CRM, Workday, just don't think it is. So anyway, I'm looking for those kinds of businesses right now. And anyway, this is why what brought me to Palo Alto. I liked what I seen as far as the income statements and all that other stuff. And I usually don't really look that deep. But when I'm looking to build a position in something, I do go a little deeper than just looking at some of the stuff. Because if I'm actually going to, and I might actually, if I don't buy this outright, Palo Alto, I'm likely to do something. I'm likely to do some kind of like stock replacement type of thing where maybe I'm selling some puts, or maybe a real deep, what they call a poor man's covered call, where you're buying a real deep in the money option, like, you know, a 70 or 80 delta, and then selling an out of money. So it's basically like the amount of deltas that you're getting. This is kind of a poor man's covered call, because the amount of deltas that you're getting equal its weight in amount of stock. It would actually have to be deeper than this. You'd have to probably go up to the 140 or even the 130. But they, I do some kind of like stock-esque replacement. I do like the IV rank in here, and which makes selling puts in here really attractive. I mean, I think I was looking at like a 150. Selling the 150s. Yeah, selling the 150s. I'm a little inside the bottom of the expected move. I was going to go out in August, but again, they have earnings at the end of May. So I might actually do something in June. Let's look at June. I'm not going to do May. Let's take a look at the 150 in June. Yeah, not paying. The 150 in June. Yeah, it's still 95 cents. Good liquidity, though. I mean, I don't really like being this tight either. Anyway, I'm not really finding... I didn't look at any trades when I brought it up, so I mean, and I haven't really traded this stock very much, if at all. I don't even know if I've ever even... I think maybe once a couple of years ago I did something in here, but I can't recall ever trading this. You know, perhaps the better trade here is to do a calendar spread. I think you do the July 170. I do think you do the July 170, 175 calendar spread. That to me is a little bit, yeah, that is what you do here. Because I'm just not really a fan of being like, as far as like selling, let me get rid of this. But as far as selling puts and being this much inside the expected move, I don't really particularly like that. Where I think the calendar spread gives you a little bit more, a little bit better. Yeah, I kind of like the calendar spread. Gives you about 4 deltas. Don't really have much theta to worry about. You have the ability to roll this if it goes against you, right? So you can roll it up, roll it down. So you have some flexibility there. And you're not spending a ton of money. So yeah, Palo Alto, 170, 175 calendar spread. And kind of a pre-earnings trade. And so I'm actually going to go and, I'm not going to send that, but I'm actually going to try and do that today. If, and only if it's down. If it's down today, I will do it. If it's not, even if it's up a little bit, I'm not going to do it. I'll wait for it to have a down day before I do that. So that was really all I had. And that's kind of the stuff I'm looking at. And I like CRM short. They have earnings coming out. Let's see, Wednesday. They come out in June. So I still like this group short. And if I were to pick one to be short, I think it's CRM. Because again, I don't think these things are, although I think they're recovering, and I think it's more of a, I hate to use the term, but I think these are value traps because I think you have all these funds out there in La La Land who actually don't have, they have funds to trade and invest, but, again, they're not authorized even by prospectus or what they're supposed to do to buy a lot of these stocks at the highs. They can't do it. They can't do it by prospectus. But rightfully, they don't want to do it either. But they have a place, they have money, and they have to put it somewhere. And so why not put it in a bunch of stocks that have gotten the shit beat out of them? Because, the issue, the thing is that, they don't have much to lose because it's not like they're piling in 10% of their portfolio. It's maybe 1% or 2% in these stocks, and they're doing it because they're low, and they don't really need much price movement. They only need it to move 2 or 3 or maybe 4%, if that, and then they get out, and then they're fine, and then they don't care. And that's what's moved these stocks more than anything is all these jackasses kind of like jumping on that little bit of what I'm going to call value trap. Knowing full well that these companies, look, they know exactly what I've been saying. They know these companies really aren't going to come back the way they were. CRM is never going to be the company it was. In fact, I would be shocked if CRM stays in the Dow at this rate of where it's gone and where it's been here. I'd be very shocked to see if it remains in the Dow. I mean, it's fairly newly added, and they kicked out Exxon. What a joke that was, right? So they kicked out fucking Exxon, and Exxon fucking went nuts. And I never really understood it. And they why they did it, right? That's why they always do it with the Dow. They always try to get darlings in there. They try to get those shining stars to make the index, better and make it look more attractive. But at this point, this stock looks like garbage in the Dow, and it's got to be one of the worst. I think it's got to be one of the worst performers. I don't know if it is, but it's got to be. It's got to be one of the worst performers in there. And anyway, I just don't see any there with this, and I would be more than happy to short this on moves to the upside. And the trade that I kind of like is going out to August, even September, is just a little simple put spread, even like a 90-85. 190, 185, small little put spread. Because I just don't see this thing getting back to 100 or 200 bucks. I could be wrong, but this kind of how I'm playing that one, and it's not just CRM, it's all of them. It's CRM, it's ServiceNow. I mean, look at these charts, folks. They're terrible. They are awful. And even with the earnings stream, right? Even with this great earnings stream, what did it do? Nothing. It did nothing. Because you know what? This earnings stream has actually been completely decimated by AI and alternative, and it's not just AI, it's alternative software from smaller companies with better flexible and more flexible payment and subscription terms than these old behemoth, sloggy, old technology fucking CRMs, consumer or customer support mechanisms that are just outdated. Let's face it, they're outdated. And then the learning curve to learn them is way too much, right? You have to basically take a fucking career path to learn half of these softwares. And so it's, and I just think companies are done with it. Companies are done with it. And the only companies that are with these companies are the ones that are just hanging in there because they've already kind of gone down that path. It's kind of like, I equate it to when you buy a tool. And when you buy a tool, you're not buying the tool anymore. You're buying the battery components, right? So if you buy the 20-volt Milwaukee, the Flex, you're going to stick with everything Milwaukee and stick with the 20-volt. If you bought the DeWalt and you bought the 20-volt, you're going to go with DeWalt. And it's not because you want to. It's kind of because you have to, because the batteries cost twice as much as the tools. And that's kind of my situation, because I'm a DeWalt, because I bought DeWalt. And now that I'm in that kind of ecosystem, in order for me to unplug from that ecosystem, I would then have to invest in all these batteries and all these other tools. And again, the tools themselves are cheap, but the batteries are fucking expensive. Same thing here with the software. There's people who have just kind of been in these ecosystems, but the thing is they're not attracting new business. New business isn't going to these places. This is all, most of these revenues coming from a lot of these software companies are just renewals from existing customers. And that's kind of where it kind of gets dicey. So anyway, that's kind of the take there on that. Outside of that, I'm not buying any of these companies at the highs. And then Apple, I think Apple is Apple. Do whatever it is that you need to do in here. I'm not buying this at the highs. I think this is due for a little bit of a pullback. But what am I to say? But that's all I got to say about that. I don't have really much else. Well, I kind of covered all the different markets, even did a couple even stock trades, and we'll see how it goes today. And I would advise, again, it's going to be another one of these days where if you got something else to do, folks, do it. Don't fucking sit in front of your screen like these fucking jerk-offs do all day. It's not worth it. Give it your, do your due diligence before the markets like this, and pick your spots, pick your trades, do them, trade for a couple hours, and then unplug and go do something else, man. And then maybe come back at, the last hour or so when the price action's there. But don't mess around with sitting here like staring at the screen all day. Man, I'm telling you, it's self-destructive. Because I continue to keep repeating that these people that you see online trading are not doing you any fucking favors, man. Because they're not going to come on and say, yeah, you know what? I shouldn't be trading this market right now. Or, yeah, you know what? The optimal time to trade the market is between, 9, I'll call it and say it's 9:30 and basically 10:30, 11 o'clock. And then after that, if nothing sets up, go the fuck home. And go do something else. Because that's it. And again, these people that you're watching, they're not going to go up there and do a live stream and trade during market hours and then not have any trades because no one's fucking watching that. That happens a couple of times and word gets out and everyone, the people who are watching will be like, what the fuck am I watching this for? There's no fucking trades here. Because I am telling you, these markets are the no trade is the best trade market. And as hard as that is for a lot of people to understand, that is kind of the case. And I'm going to stick by that. And look, I might be leaving a lot of money on the table too, but I'm leaving a lot of losses. I'm staying away from a lot of losses. And, this business is all about survival. And that's why I've been able to survive in this for almost over a little more than 35 years. So, and that's the way you have to do it. Anyway, that's all I got. Trade them tight. Have a good one.